Let's talk about review engagements. Now we're going to obviously talk about each one: preparations, compilations, review. A lot of what I have here as well is pulled directly from the AICPA's authoritative literature. I want to take it right from the source, show it to you, but also put my own spin on it. Not spin, I'm going to put my own take on it, right? I'm not changing up the meaning behind it, just kind of putting it more in easily understandable terms, right? We're not legal professionals trying to understand very complex terminologies and long documents. But let's see what we got here. This section applies when the accountant is engaged to perform a review. Sounds good. This section also applies when the accountant is engaged to review other historical financial information. Okay, so in addition to financial statements, excluding pro forma financial information. Reviews of pro forma financial information are to be performed in accordance with statements on standards for attestation engagements. In a review of financial statements, the accountant expresses a conclusion regarding the entity's financial statements in accordance with the applicable reporting framework, which you know is GAAP. The accountant's conclusion is based on the accountant obtaining limited assurance. It is not full reasonable assurance. There's no such thing as absolute assurance, as we know, and we'll reiterate throughout the entire course here. The accountant's report includes a description of the nature of the review engagement as context for the readers of the report to be able to understand the conclusion. Understanding each engagement, what is done during the engagement, as well as what is the end product of each engagement, pretty critically important. You're going to see that as we continue on throughout this lesson. Talking a little bit more about these review engagements, these wonderful, wonderful review engagements. The accountant primarily performs analytical procedures and inquiries to obtain sufficient appropriate review evidence as the basis for a conclusion on the financial statements as a whole, expressed in accordance with the requirements of this section. Here, you don't see anything about substantive procedures, and that's, I would say, the key, most important difference between review engagements and audits. Here, you're just doing analytical procedures, which we know could be getting percentages of variances between different years' financial statements, trying to get an understanding of the different accounts and all of that nature, and inquiries where you're just essentially going around, asking management, asking employees at the company, inquiring of them to give disclosures and to give responses to that, to take responsibility for certain statements. But you don't see any testing. You don't see any reaching out to third parties. You don't see any of that in a review engagement, only in an audit. If the accountant becomes aware of a matter that causes the accountant to believe the financial statements may be materially misstated, the accountant designs and performs additional procedures as the accountant considers necessary in the circumstances to be able to conclude on the financial statements in accordance with this section. It's all taken from the AICPA authoritative literature. They keep referencing this section, right? Kind of building out the standards. And the reason why it's important to see this is because guess what? You will have authoritative literature questions on the exam where you'll have to dive through the authoritative literature, where they outlined the criteria and what you're going to see in each section, diving into that specific engagement. Let's talk about objectives. What's the objective of a review engagement? I'd say just to have some pretty solid financial statements, but let's see what the AICPA says. Well, in conducting a review of financial statements, the objectives of the accountants are to do the following. Well, 1, obtain limited assurance, and 2, report on the financial statements as a whole. Now, obviously, I'll read a little bit more, but that's really the gist of it. The objective is to provide limited assurance, as we saw there, right? That's really the kicker. But you obtain limited assurance primarily by performing analytical procedures and inquiries. Again, it's limited assurance because you're not doing what you would do for an audit, which is inquiries of third parties, which is substantive testing. That gives you reasonable assurance for the audit. Here, it's just limited. You're going to do these as a basis for reporting whether the accountant is aware of any material modifications that should be made to the financial statements for them to be in accordance with GAAP. Awesome. Now we have an idea. What's the purpose of a review engagement? You want to compare them. I'd say the goal here for what I call, like I said, the menu of all these engagement types, whether it's examination, prep, compilation, review, audit, agreed upon procedure, I want you to be able to take one and take another, compare them, and understand the differences, right? I want you to be able to take an agreed upon procedure and an audit and understand what's the goal, what's the purpose of them, what's the end deliverable of them, and what are the criteria needed to actually conduct it in terms of independence, in terms of what you need to do, and all of that nature. Here are the following procedures that are going to actually be done during the review engagement. As I said, we're not actually doing substantive procedures. So what the heck are you actually doing? What are you doing with your time? What are you actually getting paid for? Well, in this case, you're going to be doing analytical procedures. Now, as I mentioned here, a common trick for multiple choice questions is to list these as an option for compilations or preparations, and that's not the case. You're doing analytical procedures for reviews. You're not doing these for compilations or preps. These are going to include comparisons of financial data and ratios, such as comparing financial statements and account balances with anticipated results in budgets and forecasts and results from prior periods. You're essentially getting an idea of what you think the numbers should be, comparing them to what the numbers actually are, and then asking management, hey, why are these numbers different? I projected that the numbers should be, what I determined. What's the reason? And hopefully management's got a good response. You can totally get management a list of demands saying, hey, for the financial statements to be correct, I believe they should list this balance instead, right? The difference is, though, just what you're doing. You're not actually doing those full-on testing procedures. So you have the authority, right? If you to try to instruct management to present more correct financial statements. And if they don't, that's fine. You can get out of there. You can withdraw from the engagement, right? It's just, why would you do a review? Cheaper, less scope, right? Less responsibility, just different options. Maybe the bank, for you to get a loan, only requires a review instead of an audit. So you're probably going to go with a review so you don't have to pay for a full audit. You're also going to analyze relationships between the financial statements and ratios for any patterns. You're going to be incredibly intelligent here. You're going to use your mind, your beautiful big brain there, and look for any patterns. And if any, let's say, months break those patterns, you're going to look around in the financial statements. Are there any accounts that just opened up randomly? You're going to ask questions. You're going to do a lot of inquiries because that's really you're going to do is inquiries and analytical procedures. Those are your two main tools. You're going to ask questions of the board of directors and analyze the meetings and the minutes of those meetings to see what they talked about and see if those items they talked about are reflected in the financial statements. And lastly here, you want to inquire of management about related party transactions, going concern issues, account balances, asking management to give the representation on all these points, restrictions on cash, procedures, subsequent events. However, the reviewer does not need to corroborate these results. As I've said, process of corroboration is the process of communicating with third parties, of conducting substantive procedures. Review engagements and other SARS engagements do not consider internal controls. You're not going to worry about that. You're not even going to assess internal controls. As such, any procedures involving evaluating them are distractors when it comes to multiple choice questions. And additionally, while inquiries are made of internal client personnel, contrary to an audit, inquiries are not made of external third parties. And lastly here, tests of details, also known as substantive testing, substantive tests, such as inspections, confirmations, observations. These are only performed in an audit. I want to make you aware of common multiple choice question, and possibly some tricks for the exam. What do we do if we have some issues in our review engagement? Well, if an accountant suspects fraud during a review engagement, the accountant should document communications with senior management about the issues. As a general theme we'll see throughout our lessons, if you find fraud within one level of the company, you go to the level above them. So if you find fraud within management, you go to those charged with governance. If you find fraud with a cashier, you go to their manager, et cetera, et cetera. If while performing a review engagement, an accountant has reason to believe that a material misappropriation of assets might have occurred, the accountant should document communications with senior management about the matter. Make sure you're getting that down. Now, just a note, we'll see this when we go through fraud. Fraud can happen in two ways. It can be a material, or not necessarily material, it could be just a misappropriation of assets, or it could be fraudulent financial reporting. Both equally as damaging. Misappropriation of assets, stealing cash, stealing inventory, fraudulent financial reporting, editing the financial statements and making them incorrect, inaccurate for your own personal gain. Let's talk about the reports. We'll dive in. We've got the lesson at the very end of the course where we go through essentially the end deliverables for all these engagement types, but let's touch upon the different types of reports for these engagements as we see them now. So a review engagement report states the following, and I would definitely make sure you know these. These are just facts about review engagements, as well as you should know that the review engagement specifically mentions them, and you'll see why in a second. Well, it's going to mention that a review is substantially less in scope than an audit. You don't want the readers being confused at all. You want them to understand what happened here. And what happened here is that you did a lot less work than what would have been required for an audit. You want to state that the review consists primarily of applying analytical procedures and making inquiries, which we've seen that as well. This is going to be specifically, explicitly stated in the report. You want to state that management's responsible for the preparation and fair presentation of financial statements. See that in an audit as well. And lastly, you state that the reviewer is not aware of any material modifications that should be made to the financial statements. Again, these are items that are going to be in the actual review engagement report. If the reviewed financial statements include supplemental information, the accountant's separate report on the supplemental information should include a statement that the accountant did not become aware of any material modifications that should be made to the information. And lastly here, each page of the financial statements that are reviewed should include a reference that states "See Independent Accountant's Review Report." Kind of like a stamp on the bottom, right, where it's, it was reviewed. So if you reviewed, let's say, the first 2 pages of the financial statements, put that sticker on there, right, that little note saying "See the review report," which is where you'll obviously talk about it and give your thoughts on the financial statements. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.